Hi, this is Georgiana Fung of Cirrus Research.
Here are some key highlights from our latest briefing report that was just released. This is our
Wrap up of the market for a month. And it shows that it was a very mixed tape, and we also had very risk-averse investors in April. Now, I think there were a lot of moving parts for the month, and what we saw for the month was mixed. So this idea of not a very tidy month echoes in a lot of the pieces of the data that we analyzed. And this brings us to this performance of the highest versus the lowest beta stocks. These are the spreads for the month for small caps, mid, and large. And you'll see for the April month, they're very negative, and as much as 7% for mid cap high beta stocks. They lag the lowest counterparts by almost 7%. Whereas if you looked at Q1, they were very positive, especially when I look at large cap stocks, when the rate risk had really took back seat for the large cap growth stocks. So what we saw in April was that the investors really were reassessing the risk to start the second quarter. Now you have the market pulling back on risk taking after a dramatic Q1, and at the same time, the earnings season kicked off. So a lot of the large companies were reporting. Overall, the large caps came out more resilient. They were up 1.5%, while mid and small caps were really in the red. And underneath this mixed tape observation, some of these sector results. So on the left-hand side, you'll see the sector performance for small caps for the month, and on the right is large caps. And what should really strike you is the underperformance of technology in the small cap arena, which was pretty dramatic. They were down 8%. Whereas if you look at the large cap side, technology stocks were up almost 2%. And I think that goes back to the earnings story. It could very well be that some of these large cap stocks that were reporting had better numbers that the consensus had expected because the expectations were being trimmed previously. So some of this had given technology more of a good footing for April as compared to small caps when everyone was selling risk. And on the other hand, what's really consistent between the small and large cap results is the quality and defensive bias. So in the healthcare arena, you see that the sector was up 6% or so, whereas in the large cap area, they were among the top performers as well at 3.7%. And for consumer staples, it was part of the top performing sector as well at mildly positive, almost 1% in small caps and more than 3% in large caps. So there's a defensive bias there in investors in April. And I think the better numbers from consumer staples for large cap can also go back to the earnings story. Now, what we saw was that there were a lot of consumer staples companies reporting from the large cap side. The results were pretty upbeat. Company executives were noticing strong pricing power, so that really gave them some lift. So looking back in April with the pullback in risk, we also saw some high quality stocks do better. Now, again, the results were mixed, probably due to the noise around earnings season. So this chart shows the relative performance between the high versus the lowest quality stocks. The maroon line is large cap, and you see that high quality had outperformed in April. But then when you switch to the small cap, you see the underperformance. But then again, if you look at mid caps, they did outperform. So again, a very mixed earnings driven story here for April. Now, with the overhang from the banking crisis, the profit cycle downturn, and most of all, the Fed watching, this all brings back home that we should really stay with the quality bias in our portfolios. So you can read more about our outlook in our latest dispatch that was released last month. And for any details for the month of April, please look at our website. The report is on the website, and also if you have any questions, feel free to contact us. Thank you.